Hey everyone, I wanted to make this video because I think Wall Street and Dropbox bears are flat out wrong about Dropbox stock. After Dropbox released earnings, the stock dropped even though Dropbox beat earnings yet again. This is something that Dropbox investors are very familiar with, as this comment posted on Jeremy's channel sums it up the best. Earning beat and great earnings call presentation and discussion, yet stock price down. Typical. Even though Dropbox beat earnings, Wall Street seems unimpressed by Dropbox's revenue potential, growth opportunities, and low percentage of paid users. I couldn't disagree anymore, and in my first video on Dropbox, I showed why I believe Dropbox is a 10x investment opportunity. In that video, I gave you my intrinsic value for Dropbox, and I explained in more detail why I believe Dropbox can 10x to an 80 billion plus company. It's been one of my more popular videos on YouTube so far, so I'd like to thank you all for your support. If you'd like to see more valuations and videos like this one, I'd appreciate if you like this video and subscribe to my channel. It means a lot. I really appreciate your support. In this video, I'm going to show you why Dropbox's long-term story is as strong as ever and why bears' biggest criticisms are untrue and are actually their biggest opportunities. It's why I'm so bullish on Dropbox stock. The biggest criticism of Dropbox stock is they are no longer a fast-growing company. Wall Street believes Dropbox has limited growth opportunities as a cloud storage service, but Dropbox has gone all in on becoming the single collaboration platform for remote work. Dropbox has recently launched a new collaboration platform called Dropbox Spaces 2.0 that's currently in private beta and will be released to the public this year. Dropbox bears look at Dropbox as a storage company in the same way Tesla bears used to look at Tesla only as a car company. On the earnings call, Drew Houston said, "Hundreds of millions of people already trust us to store and share their most important files, and we'll rely on that strength as we expand our capabilities to become the one organized place for their content and all the collaboration around it." Those last three words of collaboration around it are what you need to know about the new Dropbox. Dropbox shifting from a cloud storage service to a collaboration platform is the future of Dropbox, and Dropbox is banking on this to come true. The big news on the earnings call was that the company also announced a new 1 billion stock repurchase program. If they didn't strongly believe in the new long-term vision of Dropbox and that Dropbox is currently undervalued, they wouldn't have committed to this billion-dollar investment. Dropbox has tons of cash with over $1.1 billion on the balance sheet and re-emphasized on the earnings call that they want to use this money on strategic acquisitions to expand their capabilities in content collaboration. Dropbox has already proved that it can make great acquisitions with the $230 million purchase of HelloSign in 2019. This acquisition is looking like a steal, as HelloSign is one of the most popular e-signature solutions and the fastest growing product within Dropbox. DocuSign is a $50 billion market cap company, and the shift to e-signatures as a category is growing rapidly. HelloSign is a big opportunity on its own, and is now natively integrated within Dropbox, as you can already see how HelloSign is an example of the new shift to Dropbox as a collaboration platform. Acquisitions are a big part of Dropbox's growth strategy. Another big criticism that Dropbox bears like to point out is that out of the company's 600 million registered user base, only 15.5 million are paying users, which means only 2.6% of users pay. If Dropbox wasn't moving beyond a file storage company, then this would be a big concern. However, this massive user base is a huge distribution advantage for Dropbox as they try to become the single place for content collaboration for individuals, families, and teams. I mean, we're talking about 585 million people who Dropbox can market directly to promote their new products. The company already reported that their new features like Dropbox Family, Passwords, Vault, Backup, Transfer, Creative Tools, and data migration are not only helping with customer retention, but converting more free users to paying users. The Dropbox Spaces opportunity, the HelloSign opportunity, future acquisitions, and new products can dramatically increase the percentage of paying users for Dropbox. I think the most underappreciated aspect of Dropbox is their profitability. While there's lots of room for growth, Dropbox is operating the company very impressively. This is a company that can achieve double-digit growth in the coming years with impressive margins. In 2020, Dropbox increased their operating margin to 21%, resulting in a $99 million increase in free cash flow. Dropbox continues to make progress on their long-term goal of achieving a 28 to 30% operating margin. One of the biggest reasons why Dropbox has high profitability is because of the viral growth of Dropbox and HelloSign as products. The viral growth leads to cheaper customer acquisition costs, which is the goal of every software company, and Dropbox has done it on a global scale. To recap, I believe the popular criticisms of Dropbox, that they can't convert free to paid users, that they're just a file storage solution, and that they have limited room for growth, will turn out to be untrue long term. Dropbox has big growth opportunities, tons of cash, and they are highly profitable. After reading the financials and listening to the earnings call, my long-term bullish story for Dropbox hasn't changed. I think they are one of the most underappreciated tech companies and are undervalued where so many other tech companies are overvalued right now. If you like this video, I'd appreciate it if you like this video and subscribe to my channel. Thanks for watching.